Hello guys. Today I will be talking about the code behind the market. Lessons from Jim Simons. Everybody chases headlines. Everybody chased headlines, news, but he chased patterns. Most traders wake up to the news. Jim Simons woke up to the data. While the world argued about inflation, elections, or Fed statements, his computers were already hours ahead, crunching every tick, every whisper of movement, billions of relationships invisible to the human eye. Jim Simon did not predict the market. He did not chase the market. He decoded it. The mathematician he was who saw the noise differently. Jim Simons wasn't a Wall Street prodigy. He was a code breaker, a mathematician, a man who worked for NSA solving ciphers. He did not care about GDP or unemployment reports. He cared about patterns buried inside the randomness. In the 1980s, when analysts shouted on trading floors, Jim Simons built Renaissance Technologies, a quiet room of mathematicians, physicists, astronomers, and linguists. No broker, no TV screen, no CNBC, just code. They asked a simple question. If the markets look random, why do some sequences repeat? That questions turned into history's most profitable trading machine. Every morning, millions of traders scrot headlines. Dow rallies on optimism, oil falls on fears, the same recycled adjectives optimism, fears, uncertainty. But look closer. Those stories appear after the move, not before. News does not move price, it explains the price. By the time you react, the algorithms already traded, hedged, and closed. Jim Simons understood this before anyone. He saw news as narrative, not signal. While chasers argued about Powell's tone, Renaissance was mentioning and measuring microcorrelation between bond futures in London and soybean spreads in Chicago. The relationships that lasted minutes but repeated every day. Why his methods work? Jim Simons built his empire on three rules. Measure everything, don't trust opinions, trust numbers. Every tick, every day delay, every anomaly matters. Exploit small edges repeatedly. Even at 0.2% advantage, compounded thousands of times over, would beat any big prediction. Remove emotions completely. The system's straight, humans will observe. That last rule is the killer. Where chasers panic and cheer, Simon's machine simply execute. No FOMO, no hope, no revenge trade, just probability. Imagine running billions of simulations, backtesting decades of price data, and still not trusting any single model until it survives every environment recession, boom, crisis, pandemic. That's renaissance. They did not just feed numbers into computers, they built filters of reality. Their systems learned which data mattered and which was noise. That's why when everyone else panicked during the 2008 crash, Renaissance Medallion Fund quietly made money. Not because it knew the news, because it knew how markets behave around the news. The myth of efficient market is a very important segment that I would talk about here while doing exercise. Academics say markets are efficient, that you cannot beat them. Jim Simon disagreed. He believed markets are informationally rich but behaviorally inefficient. Humans repeat mistakes, chase trends too late, overreact to fear, ignoring micro patterns. His algorithm simply harvested those mistakes. The irony, while the big economist wrote papers defending efficiency, Simon's fund was averaging 66% every year before fees. He did not disapprove the theory with debate. He disproved the theory with his profits. How news traders get trapped. A headline appears, central bank raises rates, retail traders rush to short, but the price spikes up first, wiping them out, then crashes hours later. That's the trap, my friends. News provide direction, not timing. James Simons focused on timing. He let the chaos settle, then let his model trade the reaction patterns that repeated themselves every time a rate hike headlines hit. It wasn't prediction, it was recognition. You cannot time chaos emotionally, but you can model it statistically. Why emotion is your real enemy? Watch the news long enough and you will feel it. The drip of anxiety, the dopamine hit of breaking updates, that's not analysis, that's addiction. Simons Simons did not believe in interfering in the trades. If the computer said buy, he bought. If it said exit, he exited. No discussions, no feelings. The discipline is in obedience. If the opposite of news based trading, it is actually the opposite of news based trading where opinions change by hour. The more emotions the market has, the more emotional it is, the more predictable its behavior becomes for those who stay unemotional. Trading is like training, it is the gym of the mind. Most people chase intensity, Simon chased consistency. Everyone wants the big lift, the viral headline, the 10 times the gain. He wanted repetition, the small, same edge, perfect form, no ego. His firm did not gamble heavier when confident. It simply scaled positions by data quality, like adding weights only when form is flawless. That's how you build a machine body and a machine portfolio. Jim Simon once said, past performance is the best predictor if you know how to read it. He wasn't talking about charts, he was talking about behavioral cycles. Humans panic and recover in measurable rhythms. Renaissance tracked those rhythms like a heartbeat. When volatility spiked, this system cooled down. When markets calmed, they re entered quietly. News traders do the opposite. They speed up when markets panic. That's why most accounts die not from bad analysis, but from emotional overexposure. Another secret, Simons did not hire traders. He did not hire financial gurus. He hired scientists who thought statistically, not sensationally. They didn't argue about oil prices, they tested hypotheses. What happens if the gold futures 37 minutes after a 1% move in what happens to the yen? If the data showed a pattern, they traded it, not the story required. Meanwhile, financial media invented stories to explain moves they never saw coming. Renaissance already closed the trade, and that's the invisible layer of cause. Market moves because of flow, not headlines. Flows from pension funds, hedges, market makers, liquidity providers. Simons modeled those flows indirectly through price behavior, a language of ticks and time behavior. News traders look at the surface. Simons looked beneath it, at the statistical footprint left by the large participants before the news. That's why his edge felt like a prophecy. It wasn't magic, it was mathematics. How his method changed everything. It really did. Before Renaissance, quant trading was a fringe. Everybody laughed and made fun of quant trading. After Renaissance, it became the gold standard. Every modern algo, from hedge fund bots to high frequency systems, carries the traces of Simon's DNA. But none matched his precision because few understood his philosophy. The data will tell you what works if your ego stays quiet long enough to listen. Most people never get quiet. They drown in commentary, in prediction, in the noise of certainty. And that's the cost of being human. Humans crave stories. We need a why. Simons did not. He did not need to know why a pattern worked, only that it did, and that it kept working long enough to be exploited. He treated markets like weather system, complex, chaotic, but statistically predictable. You can't argue with the wind, you sail with it. So that's how everybody should, try to achieve the alpha. And for that, your discipline as alpha is important. At Renaissance, even Simon himself wasn't allowed to override the models. He built the philosophy, but he trusted the system more than his feelings. Think about that level of discipline. The man who created the code, refusing to touch it. That's how conviction is built. Not in the ego, but in evidence. Compare that to the trader refreshing Twitter for the next rumor. One act, one reacts, only one survives long enough to compound. But why most people cannot replicate him? They can copy his code, not his culture. His team spent decades refining models, cleaning data, questioning biases. You can't download patience, you can't buy discipline. That's the hidden edge. Anyone can build algorithms. You can remove emotional impetus completely. Just like in the gym, anyone can lift heavy only once, but few can lift heavy perfectly over the years. So here are the lessons for every trader. The markets reward preparation, not prediction. Emotion is not the biggest cost on your Emotion is actually the biggest cost on your P&L. Information is not equal to advantage. Interpretation of the information is actually the advantage. And consistency compounds over the intensity. Jim Simons proved that being early or late does not matter. Only being systematic matters. So now, as AI and machine learning dominate finance, Jim Simons' philosophy becomes the law. Everything leaves a trace, and every trace can be quantified. The trader who still trades on news headlines will always be a step behind, not because he is stupid, but because he is human. The machines aren't smarter, they are calmer. The calmness wins. The philosophy of silence. Jim Simons once said he wanted to understand the market the way physicists understand the particles, through patterns, not politics. He did not care what a company did, he cared how its stocks behave. That's the distinction in everything. Because price is truth, news is noise, and truth does not shout, it whispers. If you can learn it to hear what it whispers through data, through structure, through patience, you no longer chase market, you move with it. So, my friends, I think about Jim Simons every time I train. Every repetition, every set, every day that looks identical to the one before. Because progress doesn't come from chaos, it comes from repetition done right. The market works the same way. While other reacts to every spark, you build form. Form becomes strength, strength becomes consistency. And consistency in trading, in training, in life is a real alpha. Jim Simons did not chase news. He built truth out of numbers. And in a world addicted to noise, that's the closest thing to being a genius. Everything is planned, not in a conspirational way, but in a structural way. The same algorithms that drive order flow, the same liquidity providers that code every spread, they form an ecosystem of intent. And if you can read the intent, you can write the current instead of drowning in it. That's what my algorithm also does. It listens to the pulse before the world hears the heartbeat. When I train, I realize coding and lifting are the same art. Both reward precision over emotion. In the gym, every repetition is data. In the market, every tick is data. Form is everything. If you rush, you fail. If you control the tempo, you grow stronger. My code already learned that too. It doesn't care about hype, it only cares about the patterns that repeats quietly while when no one is watching. People ask me, do you trust algorithm completely? I tell them, I trust it more than I trust news because the news manipulates, the numbers confess. Every move you think is spontaneous. The sudden rally, the violent crash is a transfer of liquidity planned days in advance. You can see it in the build-up, in the trap positions, in the way open interest tilts like pressure before a storm. My algorithm measures that pressure. It waits, never guesses. When the dam breaks, it's already positions. That's not luck. That's preparation aligned with inevitability. Sometimes I think about Jim Simons, about Renaissance, and how his systems found order in other things like noise. I'm not pretending to be him, but I understand now why he built machines instead of chasing news. Because once you see how pre planned everything is, emotion becomes obsolete. You realize the market doesn't reward passion, it rewards recognition, the pattern recognition, the prediction recognition. And patterns do not care about your opinion. Everything is planned, even the mistakes. Every loss teaches the algorithm a new boundary. Every anomaly becomes another data point in its map of inevitability. People look for certainty, I look for probability. They look for explanations, I look for repetitions. A repetition is the fingerprint of planning. When you train long enough, you stop asking why the weight is heavy. You just lift. When you trade long enough, you stop asking why the market moved. You just understand that it was meant to be. It was meant to be how it was. That's what my algorithm has become a reflection of discipline. It doesn't fight the plan, it flows with it. It adapts to the rhythm that was written long before the first candle appeared. And maybe that's what the mastery really is. Not predicting the future, but synchronizing with the structure that already exists beneath it. Everything is planned. Most people never see it. My algorithm does. That's why it wins. That's why I win. Thank you guys. I will see you next time.